Why does everything still feel so expensive in 2025, even though the Federal Reserve has been raising interest rates from the past 2 years to cool down the economy? Inflation in the US refuses to go away quietly. Prices at the grocery store or the gas pumps, and even utilities, seems to climb higher month after month, leaving Americans wondering what's really driving inflation now. And more importantly, what can you do to protect your hard-earned money from losing value? Let's unpack this step by step. Inflation still hovers at about 3 to 4%, which is well above their 2% target. Why is this happening? A big part of it has to do with energy and food prices, which are still being disrupted by the ongoing conflicts in Eastern Europe. Also, the shipping disruptions in the South China Sea have kept oil prices elevated. As of this, a barrel of oil is trading near $95, which trickles down into higher transportation costs, higher production costs, and ultimately higher prices on nearly everything we buy, from groceries to electronics. Food inflation has also been fueled by poor harvests and extreme weather events, which means your grocery bill feels heavier than ever. Next, the lack of affordable housing supply means rents and home prices are still climbing. And for many families, housing is their biggest expense every month. And lastly, the labor market remains surprisingly strong. Even with higher rates, unemployment is low, and wage growth continues to grow, which keeps consumer spending and keeps upward pressure on prices. So even though some areas of the economy are slowing down, others keep inflation alive and well. Now, what does all this mean for you and your money? Simply, the value of your cash is eroding faster than you realize. Every year inflation remains at 4%. Your dollars lose about 4% of their purchasing power. For example, if you have $10,000 in a regular savings account earning just 1% interest, you're actually losing money when adjusted for inflation, because what you can buy with that $10,000 is shrinking over the time. And this doesn't just affect your savings. It can eat away your investments, your paycheck, and your long-term financial goals. Think about this. If a gallon of milk cost $3 last year and now costs $3.20, that may not seem like much, but that incremental rise compounds across everything you buy, and it adds up fast. And over decades, it can destroy your wealth if you don't take action. So let's talk solutions. What can you do right now to protect your money and even grow it during these inflationary times? I'm going to share with you smart and actionable strategies to make your money work harder for you. First, invest in assets that beat inflation. Historically, stocks have been one of the best ways to beat inflation. Companies that can raise prices and pass costs to customers, like those in healthcare or energy, tend to perform well. Real estate is another strong hedge, as property values and rents usually rise with inflation. If you would have invested $10,000 in a diversified stock portfolio 10 years ago, even with inflation, you'd likely have doubled your money today. Second, avoid letting your cash sit idle in low-yield savings accounts. Too many people leave large sums of money, earning less than 1% while inflation erodes it away. Instead, move your cash into high-yield savings accounts, money market funds, or even short-term CDs, which now offer rates of 4 to 5%. That alone can help you preserve more of your purchasing power while keeping your money liquid and accessible. Third, pay down high-interest debt. Credit card balances, personal loans, or any debt with interest rates above 10% are especially dangerous, because inflation makes everything else more expensive, and the cost of carrying that debt becomes even more painful. By paying down your debt, you effectively earn a guaranteed return equal to your interest rate and free up more of your income for saving and investing. Fourth, diversify your investments. Inflation doesn't impact all sectors equally. Commodities like gold, silver, or even agricultural products are often seen to rise when inflation spikes. Diversifying your portfolio with exposure to different asset classes and industries. A well-balanced portfolio that includes stocks, bonds, real estate. And finally, fifth, Stay informed and keep learning. The economy is always changing, and the strategies that work today may need to adjust tomorrow. By educating yourself and by watching videos like this, reading about markets, and understanding your options, make better financial decisions. Remember, knowledge is your most powerful investment. Now, if you're finding this breakdown helpful so far, take a second to hit the like button and subscribe for more finance tips tailored for Americans.